video, I will talk about the latest version of the Stock Engine app. The Stock Engine app uh, is live since February 2022, and since then we have been collecting feedbacks from the users so as to how to make this app more useful for its users. So based on the feedbacks that we have received, we have updated this app around 10 days back. So in this video I will talk about what kind of updates we have made and how as a user uh, people can benefit by using the Stock Engine app. And in this video we will also highlight the distinction of how this Stock Engine app is different from the other reporting tools that you will find on the internet. But before we go into the details of the Stock Engine app, a small disclaimer that anything that we provide on the getmoneyrich.com domain, either through our blogs or through the apps, we do not provide any investment advice. Whatever I learn about investment, uh, I just share my knowledge through my blogs or through my apps. So, with this premise, let me start by highlighting that what useful things we have added in the latest version of the Stock Engine app. So whenever as an investor we think about a stock, we think about a company, the basic question that comes to our mind is this: is the company worth investing in now? So our example company here is Coforge. So with respect to Coforge, the question is the company, is Coforge worth investing in now? So here you will see that as a comment, you will see the first line itself, which says that I will wait for correction. When I say I will, means I, money, will wait for correction to buy Coforge. What is the reason why I'm saying that I will wait for correction? That we will see in the next section. So if you will scroll down a little bit, you will see there another question which says, how is the stock? We generally ask this question, right? Whenever we are thinking about a stock, we often ask this question, that how is the stock? So generally uh, the question the answer to this question, we give it very vaguely. ठीक है, नहीं है, अच्छा है, बुरा है, वीक है, इस तरह का comment generally we pass on for a stock. But in this app you will get a more specific comment. So when we are talking about a company like Coforge, it will say, the app will say, the fundamentals of the stock are very strong, but the price is very overvalued. So now you can correlate. You will see here the for the stock, the comment says that I will wait for correction, and here you are getting this reason that why it is asking for wait for correction, because the price is very overvalued, the fundamentals are strong, it looks to be a good company, but its price is very overvalued. That's why wait for correction. Now I will give you another example. You see, this is another stock. Here you will see the comment is, I will avoid this stock. Why? Because the scores are too low. This is another kind of comment that you can get by researching a stock on the Stock Engine app. Another kind of comment, it will straight away say, I will buy. So basically, when you are researching a stock in the Stock Engine app, you will either get a comment like I will wait for correction, or avoid this stock, or it will say I will buy. So when you will scroll down and you will see here that the fundamentals are very strong, it means that the business of the company is very strong, but you have to wait for price correction because at present the price is very overvalued. So now at this stage, I will give you a small tip. Suppose you are researching a company like Coforge, which is a blue chip company. maybe you are researching Reliance Industries, TCS, Britannia, Marico, Larsen and Toubro, are companies like this which falls into the that umbrella of a blue chip stock. These are very good companies. By default, we can say that the fundamentals of these companies are very strong. You need not use a app like Stock Engine or any other app to identify whether the fundamentals are good or bad. These are very, very good companies. Their fundamentals are very strong. But the only thing that doesn't work in our favor for these blue chip companies is price. They always trade at a very overvalued price. So here it will come useful. Again, you can see Coforge being a good company, but still it is asking for wait for correction because its price is very overvalued. So here these three charts will come useful. You can see this 14-day price chart, this 30-day price chart, and this 90-day price chart. If you are researching a blue chip stock, it's just a tip from me. If you are researching a blue chip stock and and the stock engine app is telling you that wait for correction, then you check these three price charts in the last 90 days or so. If you are observing a price correction in the company, and especially when this company is a blue chip stock, that is the point then you where you can take a position on that company. Why it is so? The app is still showing wait for correction, and still I'm saying that we can take a position because these blue chip stocks, they generally never fall into their intrinsic value space. See, in this case the stock price is 4590 and the intrinsic value that I have estimated for the stock is around 2400 around. So what do you think? Even in the worst of case, even if this stock uh, uh, corrects by 30-40%, it will still be over its intrinsic value. So the blue chip stocks, even during its worst of times, will not correct a lot. So check these three price trends, and if you see a blue chip stock being uh, down by 10, 15, 20%, that is the point where we can take positions in the blue chip stocks. But remember, here either the comment should be I will buy, or it should be I will wait for correction. If you think about a company, you think that it is a blue chip stock, but it is saying here that I will avoid, and it means that in the past something bad has happened with the company and it is falling in the avoidable category. So I as money will avoid those stocks. This is what I am sharing through my app. So once you get an overall impression about a company. What is the overall impression? The overall impression is given in the form of text which says fundamentals very strong and price very overvalued. So this is the overall impression about the company, and in terms of numbers you will see the overall score for this example company is 64.45. Generally, a stock whose overall score is above 75%, it I will say that it is a good stock in terms of its fundamentals and also in terms of its price. Generally, it's a thumb rule. I have seen some stocks who have scored a overall score of 75%, still it looks overvalued. So in that case, I generally see these three price trends, and if it is showing a downward trend, if it is showing that the stock has already corrected by 15-20%, then I take that risk and take a position in that stock. So the next step, suppose you are that kind of investor who wants to do more research before taking a position in a stock. So if you are that kind of investor, you will definitely ask here that when I say the fundamentals very strong, what does it mean? How I am saying that the fundamentals of this company is very strong? Or if I'm saying that the price is very overvalued, on what basis I'm saying the price is overvalued. So if you will scroll down more, you will see here a module called price valuation module. In the price valuation module, you will see the next question: is the company undervalued or overvalued? So here you see in this example company, you will see a comment called no, the price is very overvalued. So uh, for this example company, in the text form, you will be able to see that whether the price of this stock is overvalued or undervalued. You need not see the intrinsic value, you need not see the current price. Just by reading this text, it will give you immediately that idea that whether the stock is overvalued or undervalued. So now if you want to know more on what basis I'm saying that the price is overvalued or undervalued, you can see this price valuation score. For each stock, we do a scoring, a price valuation score, with, which rates the stock in the scale of 1 to 5. In case of this example company, it has scored a score of only 0.9 out of 5. So that's why we say that the price is overvalued. Otherwise, you can also compare the price of the current price of the stock with the estimated intrinsic value. Even by these comparison, you can see the price looks overvalued. Even in terms of price to earning ratio, you see a price earning ratio of 40%, a price to earning ratio of 40 looks overvalued. Even the EV by EBITDA number is 21, which is not so high, but compared to its historical averages, it looks overvalued. So, as an investor, if you want to understand on what basis we are saying that the price is overvalued or not, you can check these details. At the side, you will also see a PE chart, and in the last 5 years you will see how the PE uh, uh, what is the PE trend, and you can see in the last 5 years the PE of this stock has continuously been rising, except for this COVID phase where the PE saw a small dip. Otherwise this PE trend has been on the rise. So this is another hint to us that the price is, maybe the price of this stock is moving in the overvalued zone. The next module, the next thing as an investor that immediately comes to mind intuitively in our mind, the question that whether this company is profitable or not, whether the business of this company is profitable or not. So again, without seeing any numbers, you will see here a text which says that, which declares to you, yes, the company is very profitable. So based on my algorithm, we have done the last uh, few years a data analysis of the company, and basis of that, uh, this app is telling you that the company looks profitable. So now again, if you want to know more details about on what basis I'm saying that the company is profitable or not, so first of all you can see the profitability score. Again, the score is on scale of 1 to 5, and in the scale of 1 to 5, this company has attained a profitability score of 5 out of 5. So on what basis? We have calculated the cost of capital of the company, which comes out around 13%, and the return on capital employed of this company is around 20%. It is almost like double of WACC. So the cost of capital is almost half of the return that the company is generating on its capital. That's why the, my algorithm has analyzed this stock as a profitable business. Even in terms of free cash flow, it is generating a positive free cash flow. This is another hint that the company is profitable. The operating profit of the company is also positive. It is another hint that company is profitable, and the net profit is also positive. So based on these informations, and a more deeper algorithm is running behind the scenes that is analyzing the company. But in this update, you need not see this number. If you can just read this text, you will know that the company is profitable or not. Now, after doing the profitability analysis, the next logical question that comes to mind, that whether this company is growing or not, no matter how uh, good is the company, how good is its brand name, how profitable it is, if the company is not growing, as an investor, we will find it very hard to take position on such a company. So it is very important for us as an investor to analyze the company in terms of its profitability and also in terms of its future growth potential. So again, you will see here in a plain text format which says that which answers this question, that is it a growing company? Yes, our example company is on a fast growth path. So you need not read these numbers. Just if you can read this text, you will get immediately this idea that as per the algorithm of the stock engine app, whether this company looks to be a growth stock or not. So yes, it looks like a growth stock. And to quantify how fast the company is growing, you will have to see the growth score. Out of 5, this company has attained a growth score of 4. So this growth score helps you compare. Suppose you are comparing Coforge with TCS or Coforge with Infosys, and if you compare the growth prospects of the two company, uh, it is useful if you have a score like growth score, where it makes it very useful for you to compare different companies in the same sector. So if you're somebody who wants to know more about on what basis this growth potential of the stock is analyzed, so it is analyzed based on the reserves, how fast the reserves of the company is growing, how fast the asset of the company is growing, how fast the operating revenue is growing. So if you want to know these numbers, net profit numbers growth, operating cash flow growth, free cash flow growth, and there is an algorithm which also calculates the sustainable growth rate for a company. So based on these numbers, the algorithm gives it a growth score, and based on this growth score, we highlight to you in a form of text that says that if a company is growing company or not. So it makes it very easy to interpret the growth potential. Again, on the right side, you will see there is an EPS chart, and you can see how this EPS has behaved in the last 5 years, especially in the last 1 year. The EPS of this company has grown dramatically. So this will give you an idea. The next thing that we always ask about the company, that is it a financially healthy company? If you will ever listen to an expert investor, he will always tell you that while investing in a stock, it is absolutely important that we should invest in a company that is financially healthy. A financially healthy company has the ability to get out of troubles. All companies will have troubles in some phase of their life. But if a company is financially healthy, it has that muscle power to get itself out of the troubles. So again, here you can see the first question that you will see in this module is the company financially healthy? You need not see any numbers. You just read this text. Yes, the financial health is strong. Immediately by reading this text, you will get this impression that the stock engine app is telling you that this stock is a financially healthy company. Now, if you want to know more on what basis we are saying that the financial health is more, again, you will have to see the financial health score. This health score is again calculated between in the scale of 0 to 5, and this company has attained a financial health score of 3.87. Not super healthy, but yes, it is a reasonably healthy company. And if you want to know more about how we have calculated this score, these are the parameters that we have analyzed in addition to other parameters. Is the company liquid? Is the liquidity of the company high enough? Here again, I could have given you the numbers here. I could have given you the uh, current ratio, quick ratio, cash ratio. But again, those numbers will look to you more like a jargon than anything else. There are numbers. You will scroll down, there are loads of numbers here. So, but before you, but in order to help you to make a first impression about a company, I do not want to load you with numbers. I want to give you a fact which is easy to interpret. And you can see here, for company's liquidity, in plain text you can see, yes, the company is liquid. Is the return on equity of the company is growing? Yes, it is growing. Is the return on equity high enough compared to its peers? Yes, it looks high enough. Is the company reducing its debt? Yes, the company is reducing. No, the debt equity ratio has grown in the past. So this is one reason why you can see why this company has attained not a very high financial health, because its debt is rising. No, the company's debt equity ratio is low, or in this case, we are analyzing the trend of debt, whether it is in the past, compared to the past, whether the debt has grown or not. And in this uh, parameter, we are saying that whether the standalone value of the debt is high or not, the debt equity ratio is high or not. So, though the debt equity ratio is low, but still the debt is on a rising trend. So this is kind of clarity that this app can give you about a company. Again, for ROCE, return on capital employed, is the ROCE growing? Yes, it is growing. It's a big thumbs up. Is the ROCE high enough? Yes, it is high. So a company whose ROCE is growing, whose ROE is growing, whose debt equity ratio is low, these are the factors that makes it a financially healthy company. And when you use an app like the stock engine app, it gives you this clarity, because you don't have to interpret it yourself. A text is written here, and just by reading the text you will know that why these company, I'm saying that it is financially healthy. Again, the next two steps are more complicated than others. Quality of management. It is very difficult. As an analyst, I know it is not so easy to judge the quality of management of a company. So what I have done, I have formulated my own set of parameters based on which I can judge the quality of management of a company. If you want to know what are those parameters, check this text. I will not repeat it for you. This video is becoming too longer now. So based on these questions and based on the answers that you will see here, you can read it. This app has given this company a, a management quality score of 4.62 out of 5. It is an excellent score, and that's why you can see here the quality of management. How is the quality of the management? To answer this question, this app says yes, it is very good. So this is what uh, uh, the app says about the quality of management. For me, one of the most important function of the quality, one of the important parameters to judge the quality of management is to see whether the operating profit margin, not operating profit, not operating income, not net profit, operating profit margin, whether the management is able to enhance the operating profit margin of the company in the long term. So you can see for this company, in the last 5 years, the operating profit is showing a downward trend. So that's why maybe it has not scored a complete 5 out of 5 score. The, lastly, you can see here the competitive mode. Here, the app is comparing this company with its peers and trying to understand that is this company has some competitive moat? Is this company has some competitive advantage over its uh, peer companies? So based on the analysis that the stock engine app has done, this company does not seem to have a very strong competitive moat. Why it is so? Because you can imagine, uh, who are the other competitors in this space? The competitors of this example company are companies like Infosys, TCS, Wipro, now it's L&T Mindtree. So these are big, huge companies who are competing in the same space, and that's why. And this, moreover, this industry is also very, very crowded. So that also decreases the competitive moat of the companies that operate in that industry. So, so you can see, by just by reading the text, these texts that are highlighted in green, these text that is highlighted in red, even a novice investor, even a beginner will understand that whether this stock is good or not. For sure, we are giving no investment advice, but at least you can make a first impression about the company by reading the app in the order that I have told you to read. There are much more information here. If you're somebody who loves the data, who loves to see more numbers, there are a lot of numbers presented here. You can see the last 10-year price trend is there. You will get an impression of how the company price has performed in the last 10 years. You can see the intrinsic value curve. You will also see this theme rank. This theme rank is something we have added new. We have following themes, screening themes in our app. The screening themes are like best stock theme, profitable stock theme, blue chip stock themes. So in the best stock theme, this company has scored a 0 rank. It means that in our screener, the best stock screener, this company does not appear. But in the profitable stock scheme, out of 1271 stock, this stock has earned a profitable rank of 241. So just by looking at this theme rank table, you will know that uh, does this company appear in the blue chip space? Yes, it is appear. Is this company appearing in a debt list of debt free stocks? Yes, it is appearing. Is this a fundamentally strong stock? Yes, it is appearing. Is this a profitable and growing stock? It says 0 score. Means that uh, the profitability and growth numbers of the stock is not good enough to give it a very high score. Only 176 stocks got a rank in this stock screener, the profitability and growth screener, and this example stock has not got a rank. So this is the utility of this module, theme rank module. If we'll go down more, you can see more. Now there will only be numbers. Most of the apps on the internet will give you this kind of data: today's high, today's low, 52-week high, 52-week low. So you have to read these numbers, do a lot of interpretation from your own part. But uh, there are a lot of numbers here, there are a lot of charts here. You can see, like other apps, whatever number you want, all numbers are here in this app. But is it easy for you to interpret the data by seeing only the numbers? Not. So that's why we have created this updated stock engine app that makes it easier for its users to interpret information about a stock. Another thing I want to add, that please always use this search box. In this search box, you can search for your stock by entering the its BSC code, NSE code, or the name. If by name you are not able to find, then type the BSC code here and it will take you to that stock page. Again, we have also added a element called contact element. Earlier the users would have to email me their queries or some of their doubts. Uh, by adding this contact module here, you can just uh, click this button. It will open a contact page. Just type in your query there, your doubts there, whatever. If you have any issues, you can type there and I will get my email. So you need not leave the app. You can straight away contact me from the app itself. So these are the changes that we have made in the stock engine app. There are more new updates coming. There are more things that we have already updated. In the next video I will explain it that to you. I hope in this video I've made it clear enough that how this latest version of the app is more useful than before. Thank you for watching this video. If you like this video, please share this video and please do subscribe to my YouTube channel, and if possible, try subscribing to this app as well. Thank you very much for watching. See you soon. Bye.